IVM.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and my guest today on this episode is Viraj Nanda, CEO, co-founder, Globalise. And after a long time, we're going to be talking about international investing, what's happening there, what's hot, trends, new products, and much more right after this short break.
$100. That's all it takes to begin your journey with Bitcoin and Ethereum. No, really. With CoinSwitch, you can start investing in over 100 cryptocurrencies with just 100 rupees. On top of that, there are zero charges for deposits and withdrawals, so you can trade, buy, sell, however and whenever you want. All of this, plus their extremely intuitive interface, makes CoinSwitch the perfect app for beginners in the crypto space. But don't take my word for it. Just download CoinSwitch for free and try it out for yourself. If you'd like more information on cryptocurrencies, tune into a show about crypto with me, Rohan Joshi, my new adventure on IVM podcasts. CoinSwitch, kuch to badlega.
And welcome back. Viraj, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Hi, Anupam. Thank you so much for having me here today. It's a pleasure to be here.
Great to have you here. So let's start with a very brief introduction to Globalise. For listeners who have not heard of you, feel free to go into any statistics that you have.
Sure, absolutely. So, I'll start with a quick background about how we really started Globalise. Me and my co-founder, we were actually living overseas. And, throughout our earlier career, we'd always been fully invested in the Indian markets as we were living in India. And there's a strong belief in the Indian markets, for all the reasons why it has continued to perform so well. And due to circumstance, we were forced to invest some of our money overseas into the international markets. And, as we were doing our research, we realized that some of our fundamental theses around why we thought India would perform better than the US markets was incorrect. A lot of the global leaders are based in the US. A lot of the innovation happens in the
Yeah, Viraj, you're talking about how you and your partners were always invested in Indian equities. Go on, please.
Right. So, then living overseas, we slowly started researching the international markets and started investing our own capital. And we realized that our thesis for why we thought international markets wouldn't perform as well as India were fundamentally flawed. Because, a lot of the innovation is happening in the international markets. A lot of the global leaders are listed in the international markets. And therefore, by having access to those markets, our portfolios benefited significantly. And that's when we set about building Globalise to enable Indians to invest in the US markets as well. And the key component for us when building Globalise was how we can provide the investors with adequate guidance as they go through this process, because it is a new market, there are new processes. And that's been our core focus throughout this journey in terms of how we can almost handhold the Indian investors through their international investing journey. And
go on, please.
Yeah, so it's been an interesting journey so far, and we work, extensively, of course, with direct clients as well as with an ecosystem of wealth managers and IFAs in the country. And today we have over 10,000 clients signed up, and within our IFA ecosystem, they're managing over 15,000 crores of AUA. So it's a large pool of advisors who have a significant interest in diversifying their clients' portfolios beyond the Indian markets.
Very interesting. You mentioned IFAs. I'm going to pick up from that, right? Because we've had Vested and we've had Vinvesta on our show, and I believe that they're probably aimed at reaching out directly to clients. You mentioned IFAs. Now might be a good time to explain to our listeners how Globalise is different from a Vested, a Vinvesta, or from any other similar player in the field.
Absolutely. So, like I was saying, one of the key tenets of Globalise right from the beginning has been providing customers with the necessary guidance and support through the process. We do so, of course, directly to the clients as well, to those who sign up on Globalise. But we realize that there is a large ecosystem of investors in India who are very comfortable and who invest through their wealth managers and IFAs. And what we have done is actually enable these IFAs to offer their customers direct international investing. And continue to provide their customers with the support and guidance as they do with their domestic investments. So, to that extent, we've actually built an entire separate partner platform that the IFAs can use to really, handhold and guide their customers through every step of the process. And for those customers who are working with a wealth manager, they can continue to invest in the exact same way and get the same customer experience and the same sort of attention that they get when it comes to international investing as well.
Okay, Viraj, let's go into international investing from India, which is really picked up. And you yourself said that you've done lot of work that shows that all the innovation is happening outside. Maybe that builds a case for us sitting here in India to have an international portfolio. So, any interesting data, any trends that can help our listeners understand what's hot, what all things are going on, right? Because whenever we hear about international investing, all we know is probably Elon Musk and the FANG stocks
Right.
out there. But anything that you've got, data, trends, insights to share with our listeners.
Absolutely. So I think one of the key things is in terms of the interest we've seen, there's a lot of interest from the younger population, as one might expect. So, over 68.6% of our population of the customers on our platform are actually under 35 years of age. And these are the sort of, early adopters of international investing, as one would say. When it comes to the actual, investing on the platform in terms of what people have been interested in investing in, of course, when it comes to equities, the FANG stocks stand out as the leaders in terms of what people are putting their money into. Um, what we've done is also, build our portfolios called globes, which are curated baskets where customers can invest into a specific theme or towards a specific goal. And over there, we've seen a lot of interest in both aspects. So, our flagship portfolio, which is the multi-cap wealth generator, which provides a broad exposure to the US market, is by far and away the most popular globe on our platform. 31.9% of all the AUM in the portfolios has gone into this one, and there is continued interest and more. We're seeing more inflows into these portfolios. And as I mentioned at the top of this show as well, the U.S. markets provide access to a lot of innovation, a lot of emerging themes and trends that one might not typically have access to in the Indian markets. And we're seeing a lot of interest towards that as well. And in order to provide customers access to that, we've launched a few specific thematic globes, such as biotech innovation and clean energy. And of these, it's actually the biotech innovation where we've seen a tremendous amount of interest as well, with just under 21% of AUM residing in that portfolio. So, as we're seeing investors come through, there are, of course, people who are looking to take a broad exposure to the US market to sort of play on that diversification theme. And there are also a lot of customers and investors who have specific themes that they think are going to outperform and provide excessive returns over the coming years and are looking to take very specific exposure to those themes.
Okay, Viraj, I wanted to just help our listeners understand, maybe someone out there who's new to the concept of international investing. Please just help our listeners figure out the landscape of the investment avenues out there. Somewhere in July, you had written a pretty good, extensive blog post on the Globalise blog, about mutual funds versus ETFs and types of ETFs available since July to where we are. I think the number of products has only increased. So you've got stocks directly that you can buy. You've got mutual funds. You've got ETFs. You've got fund of funds. You've got index funds also, I guess. So we just walk our listeners through what is the landscape out there in international investing, and B, in your opinion, what's ideal for which category of investor?
Sure. So, when it comes to international investing, there is, of course, the direct route that you mentioned, which is via a US brokerage account like the one that Globalise offers. And through that, one can get access to, of course, stocks, listed equities in those specific markets, but also a whole host of ETFs. And I think this is one thing which has caught the interest of a lot of investors as well, is the sheer breadth of ETFs available in the US market. Because via these ETFs, customers can take exposure to a whole host of investment ideas and investment theses that they might have. So, starting with the more plain vanilla S&P and Nasdaq exposure, going into broader US market, be it value, momentum, or other factor-based ETFs, um, and then into other asset classes as well. So global bond ETFs, US bond ETFs, real estate investment trusts, and ETFs that invest in real estate investment trusts are also picking up. There's also the whole spectrum of commodities that one can take exposure through to ETFs, through these ETFs, specific commodities such as gold, silver, palladium, as well as diversified baskets of commodities. And additionally, recently there was the Bitcoin ETF that was launched as well, through which customers can take exposure to Bitcoin via a regulated product. So, the direct exposure really opens up a whole host of opportunities. And actually, I think one thing that I missed out was also specific geographic exposure. And we've seen customers with interest where they have a thesis on, say, Vietnam or Thailand or Latin America, and even specific ETFs that provide exposure to those particular geographies also do exist. So really, while this, customers are able to build a truly global and truly diversified portfolio across sectors, geographies, and asset classes with direct exposure to the US markets. Of course, investors in India can also have the fund of funds route through which they can take exposure. And, the fund houses have, like you mentioned, have started offering some of these fund of funds that provide them exposure to some of the international markets as well.
Right. And if I was to make a case for international investing to someone that I meet, then what kind of investor is ideal for international investing in your view? Or if I look at it from an asset allocation perspective, whichever way you look at it, why is international investing important today?
Sure. So there are, I'd say, maybe two or three broad reasons why, and people should think about investing internationally. And this is really important for, I think, every long-term investor, anyone who's thinking about accumulating funds with a long-term horizon. It is important to be invested in the international markets. Firstly, of course, going back to one of the most dominant themes is the innovation that is happening. New products that are launching. We think about the metaverse and this entire new realm of technology that is being created. All of that is happening in the US. We think about, the situation we find ourselves in with the coronavirus and all of the research and development and manufacturing of the vaccines. A lot of that is happening in the US. So that continues to be the sort of leading force in terms of research, development, building new products, new innovation. And as an investor, to really be able to benefit from this and capture the wealth that's being generated from this innovation, it is important that one has exposure to the international markets.
Got it. So, folks, on that note, we're going to take a small break. On the other side, we're going to talk about the details of international investing as well as Globes, the product that Globalise had that Viraj just mentioned earlier in the first part of this episode. So don't go anywhere. We'll be right back.
Namaste, this is Cyrus Brocha. I am part of the government cancel culture program to remove rubbish off all the different streams available. So what we have is all the collected rubbish we put together on our show. It's called Cyrus Says. It's on IVM podcast. You have to watch it and listen to it. It's on our app. It's on our website. It's on the YouTube channel. It's on Facebook. There are many different ways. Don't bother me and ask me how. You have to find out. We talk to different personalities. Many of them are known. Some are just people we meet downstairs and invite them up for chai. But the point is, it's fun and it's very therapeutic. So please join in and listen to Cyrus Says.
And welcome back to this episode of Paisa Vaisa. My guest, Viraj Nanda, CEO, co-founder, Globalise. Okay, Viraj, now let's look at the nitty-gritty, the execution side. Okay, let's look at the costs of international investing. And it's a little bit more complex than a typical domestic brokerage product because you've got remittance fees, you've got taxes, you've got a lot of stuff. So could you just walk our listeners through what exactly are these costs of investing directly in buying, like you said, maybe a Tesla or a Google? And therefore, if I'm thinking that I should buy stock that's worth, say, $10, right, which is about 750 rupees, in my mind, what would the total cost to me would look like?
Sure. So, the first sort of the cost of actually investing and of buying that security is very, very low when it comes to the US markets. It's 2.5 cents per share, which is around 2 rupees. And you know, be, taking the example you gave of the example of a stock like Google or Apple, and a lot of the sort of popular stocks end up being significantly higher in value. The cost stays the same, which is 2.5 cents per share, irrespective of the share price on that. We also have a premium plan for the more active traders, where a customer can pay 5,000 rupees a year, and trading is free for the entire year on the platform. Like you mentioned, there is of course a cost of adding money to the platform. We have arrangements with some of the banks to reduce this remittance fee to 500 rupees as a flat fee. There is also an FX margin that the banks charge on top of this when the customer is sending money abroad. And this is actually one of the key points that we are looking to solve for the customers, and we're actively working on a solution for this, whereby we can eliminate a significant portion of these costs that the customers face when it comes to adding money to the brokerage platform.
Right. So,
Yeah.
go on, please.
And then you mentioned in terms of the tax aspect. So from a taxation perspective, this is there's no taxes charged on capital gains in the US. And there is also a double taxation avoidance agreement. So any individual investing in the US is not double taxed on any income they earn. Any capital gains on the equities are taxed in India at 20% with indexation benefit. And dividends are taxed at a flat 25% in the US, with that any tax paid being available as credit towards the overall Indian tax liability of that particular customer.
Okay, so like I said, if I'm buying something that on the ticker says $10, then what should I assume that when I have to pay? Do I have to pay $10? Do I have to pay 10.1, 10.2? Any just a rough idea out there what I should build into my mind?
So when a customer is thinking, so the average, just to I think maybe help with a little sort of context in terms of what we've been noticing and in terms of how the customers have been thinking about investing.
Sure.
The average ticket size that we see being put onto the platform is around $3,200.
Okay.
So that's the average what a customer is putting onto the platform to then invest and really build a diversified portfolio. And that's around 2.5 lakh rupees. When it comes to that, assuming the customer wants that entire corpus to be available to invest, the customer should bake in another 500 rupees from a remittance cost perspective, plus an FX margin that the bank will charge, which will be quoted in the FX rate that the bank gives. And then, depending on the share price and number of shares, but taking your example of a $10 share, really the cost of buying that one $10 share on the platform will be $10.02.
Got it. Okay, got it. Very interesting. So I'm just, the reason why I'm asking all this is that for a lot of people who've, in the last 1 year especially, last probably 1.5 years especially, who've opened a brand new account, buying and selling shares in India is quite easy. Like the ads say that it is actually quite simple on your app, on your mobile, or wherever. If I was to compare the same experience, or what's called UX and UI, how does international investing compare to domestic investing? I guess domestic investing has now become quite easy and quite smooth.
Right.
Where is international investing in that same curve? If you look at the UX, UI, as well as probably the cost, taxes, and anything else.
Sure. So, overall, I would say from an experience perspective, international investing is also entirely digital. like you mentioned, anyone can download the app and get started, complete their KYC in a matter of minutes, and also have their account approved in a matter of minutes. Really, then, and from then on, adding the funds, a lot of the banks have made that a digital process as well. And of course, investing is on the app and can actually be done 24 hours of the day, even when the US markets are closed. Orders can be placed that get executed and picked up as soon as the markets are open. So the customers do have that seamless digital experience when it comes to the entire process. And of course, just in terms of the account opening, they can do that with their PAN card and Aadhaar card. So from a documentation perspective, also, it is much like the Indian account opening experience.
Okay, Viraj. So just wrapping up this episode, let's talk about Globes, right? Which seems to be a very unique proposition that you guys have got at Globalise. Just if you can please explain to our listeners, how does Globes work and what's so unique and attractive about it?
Sure, absolutely. So, the concept behind Globes was really how we can make international investing even easier for the customers while providing them that guidance when it comes to a new market. So Globes are really a way to build a diversified portfolio with a single click. We provide goal-based as well as thematic Globes, whereby an investor can take exposure towards a specific goal or towards a specific theme with a single click and invest whatever amount they want towards that. These are based on our proprietary algorithms, which cover a range of ratios such as Sharpe ratio and the Sortino ratios, as well as the growth metrics of the particular securities, as well as their relative strength. And these are constructed and optimized using mean variance optimization by the research team that actually builds this underlying portfolio that the customer can invest in. And the popular Globes, I mentioned the multi-cap wealth generator, which was drawing significant interest from investors. So over the past year, that has given a return of 46.5%, which compares to 40.8% of the S&P 500. And another Globe, which is more of a contra play, which is a dividend value and low volatility portfolio, has also, over the past few months, as we've seen the interest rate shift and the dynamic shift in the US, has also started capturing investors' interest. And this has also done well, given a return of 44.8% over the past 1 year. So, these portfolios really is unique in the sense we have a very well-tested, robust algorithm built and that's running behind these. And from an investor's perspective, continues in our fundamental idea of providing customers with the guidance that they need to be able to invest in the international markets. And this is an aim to really simplify the investment decision-making process for the investors.
Great. So, and how does this work in terms of costs, in terms of maybe taxation? So, for example, does it work in the way that if I have $100, can I buy a, let's say, FANG Globe, right? Or does each Globe come at a specific cost? And I need to have that much in minimum to buy one Globe. How does that work?
Sure. So, in terms of the investment, a customer can invest whatever amount they want. We have kept $100 minimum just because that ensures the accuracy of the underlying portfolio, that it can be managed and rebalanced in an accurate manner. But beyond that, there is absolutely no minimum. There is no price of the Globe. It's really like one might think about a mutual fund where you can invest whatever value you choose to invest in it. And over here, when a customer invests in a Globe, they get the underlying instruments in the Globe and they own the underlying instruments in the Globe. When it comes to the costs associated with this, there is a $2.99 purchase fee to buy the Globe on the base plan. If the customer is on the premium plan, buying a Globe is free of cost. And there is a platform management fee associated with the management of the Globe on an ongoing basis. From a taxation perspective, really, there is no difference between a Globe and any underlying instrument because this is, again, continues to be treated as international equities. And so a customer would treat this from a taxation perspective exactly the same way as any, be it any individual stock or ETF.
Got it. So some examples of globes I can see on a website, for example, there's probably one which has Apple, Facebook, Alphabet, Microsoft. So is that how you design these globes?
So these globes, we sort of start with a fundamental thesis on what we're trying to provide, what we're trying to build, and what we're trying to provide exposure to. And then accordingly, like I mentioned, go through the underlying instrument selection process based on algorithms, and then optimize it to decide the weights of each instrument within the portfolio. So to give you an example, the multi-cap wealth generator, which is really a portfolio, the starting introductory portfolio that anyone who is beginning to invest in the US markets, that is the portfolio that they would go for. Provides broad exposure to S&P 500 companies, NASDAQ 100 companies, as well as some of the mid-cap and small-cap companies. Of course, portfolio includes your FANG stocks, Microsoft, Tesla, as well as a whole host of others. You're going into maybe one of the more thematic globes, the clean energy globe, which, like the name suggests, provides exposure to alternative sources of energy beyond traditional fuels. This, we've plays across the many different types of alternate energy that are coming up, including solar energy, wind energy, water, and provides exposure to companies such as Danher, Ecolab, American Water, that all are market leaders and operate within this space.
Fantastic. So, folks, there you go. The website and the name of the firm is Globalise. That's Globalise with an S. That's Globalise. And my guest, Viraj Nanda, CEO, co-founder of Globalise. That's a wrap on this episode of Paisa Vaisa. Viraj, thank you so much. Thank you so much for doing this for our listeners.
Thank you, Anupam. Thanks for having me.
And listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcasts on Twitter and Instagram. And if you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. And thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
IVM